Sonia Coons is our guest on Money Matters today, and we're going to be talking about home equity loans. Sonia, thanks for being with us.
Thank you for having me.
So explain briefly why I might consider taking out a home equity loan.
A home equity loan, the interest is typically tax deductible when you file your taxes. Always check with your tax advisor. I'm not a tax advisor, of course, but typically on your primary residence, the interest should be tax deductible. Another great reason to take out a home equity loan is the interest rate. The interest rate is typically a little bit lower than your car loans, so that is a great big plus.
What about qualifying for a home equity loan? Do I need to have a certain percentage of my house paid off before I can borrow against it? What are the details there?
Well, here's a couple things that we do look at. Of course, we're going to have you come in and fill out an application or call me over the phone. I'd be happy to fill it out over the phone. But we do look at, number one, you have to have good credit. And yes, you do have to have some equity in your home. We look at the maximum equity, or the amount that we can borrow, is 90% of the value of your home. The other things we look at would be your income and your debts to make sure you can afford that payment.
Sonia, you mentioned my home's value. What figure is used for that? I know we get a tax assessment each year from the county. Is that the document that's used to determine how much equity or how much our home is worth?
Well, the first thing, I know what you're thinking is you can probably look at your real estate tax statement and look at your tax assessed value. We actually have to go a little bit deeper than that. We do have to either have a full-blown appraisal by a certified appraiser, or what we call a broker's price opinion. And that is looking at comparables that have sold, comparing the size of your home within the last 6 months to a year. And that gives us a valuation.
Does the money have to be reinvested into our home, or can we use it for other purchases?
You can use that money for whatever you want to use it. What is on your wish list today?
Well,
you can use it if you want to purchase a boat. You can use it for improvements on your home. Some people will borrow money for their college education for the kids coming up. Anything that you want to use it for.
and what are the terms for a home equity loan?
Your second mortgage loan is going to be totally separate from your first mortgage. You've got your first mortgage payment here. This is going to be a separate payment. We calculate the payment or amortize it over 180 months. We can go shorter, of course, but that's 15 years to keep the payment low for you. We do lock the interest rate for 61 months and keep the payment affordable for you. If you want to fully pay it off over a shorter time period, you can always do that.
How about making payments? How do we pay it back? Is it just made an extension of our original mortgage, or is it a totally separate payment?
You can look at it just like a car loan. We're going to either give you a coupon book, or we prefer to have the payment deducted right out of a checking account because it makes it simple and easy for you. But it's just a monthly payment.
Well, Sonia, thank you so much for the home equity loan information.
Thank you for having me.